Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, overnight the US dollar booked its best round of gains as it rises to a fresh 5-day or a 6-month high against a basket of currencies and recorded a high of 93.33 to the index. It is seen from the Australian dollar after taking quite a severe hit overnight. The focus is back on 73.75 and a break beneath there would give further scope to the downside of 71.5 cents. Now, from what I can see for the top side is the market currently holds at 74.95 as resistance, and it would need to break above there to get further indication to the upside. But at present, with the US dollar increasing overnight, does give concerns that we could be looking for further weakness. And then from that point, would see the euro pressure in this level now, 118. A break beneath there would give further scope to the downside of 116.60. With the dollar index powering the way it has overnight, does suggest that we could see further pressure across the board. Resistance on the day for the euro at 118.75. 118.75. The dollar yen story finally broke above the 109.70 level. Now, what started all this move for the US dollar was the fact that the 10-year Treasury yields spiked to a high of 309, the highest since July 2011. The bond market sell-off began after the government said US retail sales grew at a healthy pace in April, signalling the economy started the second quarter on a positive note. Relatively weak retail sales in February and March were revised higher, another sign for firmer inflation. And if that's the case, then we could see further hikes coming very soon out of the US, not 3 but 4 for the year. At present, dollar yen's target looks at 111.25 with the support now seen at 109.60. The pound hasn't gone anywhere over the last few days, and that's surprising considering the market overnight. Economic data that was released showed that 197,000 employment came into play for the first time in 3 months. That was a jump since and exceeding in 2015. The Bank of England left interest rates on hold last week, despite saying that February that borrowing costs were likely to go up more quickly than it had previously thought. It said it wanted to be more sure the economy was bouncing back after barely growing in the first quarter. Economists said that the strength of hiring in Tuesday figures suggests Britain's economy is not doing too bad for 2018. So that suggests we could be seeing a potential rate hike out of the UK in June. On the day, the support comes in at 134.65 and a break beneath there would give further scope to 133 with a resistance of 133.5. Well, the gold crushes the support 1,300 and now gives concern that we are looking lower towards the region of 1,278. We do need to see the rise above 1,300 to turn this picture around, otherwise further pressure will be seen. Silver outlook still holding relatively well and above the $16.15. As long as we maintain above there, I'm still holding a view towards the top side of 16.55 to 16.85. Sub 16.15, however, would give a target of $15.85. And rounded off with oil, well, the market rejected that level of $72 a barrel overnight after posting a high of 71.92. It expected to see further weakness in the coming session and looked to a target of $66 a barrel. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the rest of the day that's ahead.